if you are still sticking to find the best point of interest for entry, this is gonna be the best and the last video that you need. So watch till the end. Yo everyone, welcome back to the new video. I'm Ibo. So in the previous video, I talked about the key levels, and I told you if I get a lot of comments about the key levels, I'll be going to create a video about it. So this is gonna be a mini course about all the points of interest, details, and the subject that you need. So first of all, we are going to start with the type of the point of interest. Okay, I'll be going to teach you what type of the point of interest that you need to learn. Then after that, we are going to go to the chart example. And after that, we are going to talk about the key levels, how you can find the key levels, how you can identify the best key levels, which time frame that you need to identify the best key levels, plus example. Also, you can download the PDF for free from this link and all the link on the description. So grab your notes, let's start. So first of all, what is the point of interest? So in this video, we will explore the topic of the point of interest, also known as a POIs. A POI is a price level when we can expect the market to react, a setup from, or potentially a place to enter a trade. The main problem people have with the POI is that there are so many visible area and the clear area that people get confused. Okay, which area is correct? Which area I need to enter? And this is gonna be make them a stop loss or break even and or miss trade. And you know, if your order block is here, you're gonna say, okay, I will gonna enter here. But below that, you have another point of interest. So you're gonna say which point of interest is so important. So you're gonna get confused and say, my strategy didn't tell me. And what should I do? So we are going to cover this also. And this is one of the reasons why we need a rule to select the POI. So in this PDF and in this mini course, I'll be going to teach you also the rule and a checklist to select your POI. Okay, so let's start. So first of all, the first thing that we must understand, 1, 2, 3. So first of all, the first thing that we 1, 2, 3. So first of all, the first thing that we must understand is going to be the fundamental rules of the POI. So these are going to be the 4 rules that you need to select the best POI inside of your range. So if you don't know what is the range or what's the main strategy that we're talking about, check out this video here, then come back to this video. Or if you already know what is the range, or if you have your specific edge and you just need to improve your finding the POI, this mini course 100% gonna help you a lot. So the rule number 1 is a high probability POI should be chosen from the higher time frame. So we are not gonna just choose a, let's say, POI. Let's say if you have a 15-minute range, or let's say if you looking for opportunity in 15 minutes, let's say time frame, or 5-minute time frame, we are not going to look for the POI on that same time frame. We always going to look for a high time frame POI, because the high time frame POI going to give us that a big huge area that's gonna show us here's gonna be high probability area that price can start to reverse. So that reason we need a high time frame POI. Okay. This is one of the reasons why people struggle to choose a POI, because they focus too much on the lower time frame, ending up with too many options. As I told you, see, if we go to the high time frame, we are going to have one big area as our POI. Okay, so we know, okay, price gonna just, let's say, react from this level. But if you go to the low time frame and you're gonna say, okay, I have a, let's say, an order block here, imbalance here, or fair value gap here, or you're gonna say, okay, unmitigated weak here, a lot of this type of the POI, what should I take for my trade? So that reason, high time frame POI, looking for high in a POI inside of the high time frame, it's gonna be the best option. So yeah, and this means that a POI should always be chosen from the highest possible time frame. Rule number 2 is high probability POI must have a liquidity above if we are looking for buys, and below if we are looking for sells. This gives the market a reason to go towards a POI and a reason to react at the POI itself. So if I want to show you a quick example here, if we have, let's say, 3 POIs here, let's say these are going to be the 3 POIs that we have on the market. Okay, you are not going to choose from randomly. First, we learned the first rule. Okay, so we are going to choose the high time frame POI first. Okay. And also the second rule is we must give a reason. We must have a reason to choose that POI, and that reason going to be the liquidity. If you want to choose this POI, you are not going to choose it randomly and say, okay, because this is the nearest one, or let's say this is it's so cleanest one, are we going to choose this? No. Every great and valid POIs have a liquidity above or below it. So if you are looking for buy, your POI must have a liquidity above it. So let's say if this is the market, okay, you are looking for buy here, these at this area we must have a liquidity, okay, to give us a reason to market take the liquidity and go to upside. So if you are thinking about I mentioned in the previous videos about the, let's say, internal external range cycles, this is going to be the exact same. So the market is not move randomly. We all know this. Market is moving from liquidity to other liquidity. Okay, so the liquidity's act or role is as a, let's say you are driving a car and the liquidity is going to be that gas inside the car, right? So exactly on the market, the liquidity is the gas of a car on the market. So let's say the market is a car, that liquidity going to be the gas. So market going to take the liquidity from here and move to the other liquidity. Exactly the internal to external range cycle. Okay, so this is going to be the most important thing that you must understand. So let's go to the rule number 3. A high probability POI must be unmitigated on time frame in which we select it. Okay, this is going to be the another most important element to choose your POI. So let's say if we have a 3 valid POI here and you stuck, okay, which are we going to choose this? And let's say this is going to be the, for example, a market here. Okay, so let's say you stick between these two POIs here. Okay, just imagine this is a POI. Okay, and the valid POI, the POI that we can expect a reaction from it, must be unmitigated. Okay, so for example, if we have a POI here and after that, after a movement, okay, if we have a, for example, an order block here that we are going to also talk about the valid order blocks. Okay, if price come here and tap to this POI and go up, so this is not going to be unmitigated anymore. Price already take the orders and start to move up. So don't start to waste your time on the mitigated POIs, because it's just wasting of the time. But let's say we have a POI or order block here that is unmitigated. It's chosen from high time frame, and also we have a liquidity above it. 100% price gonna come and give us a reaction from this order block. So for sure the market is not 100%, but this is gonna be the 99% of the case that's be happen on the market. So always try to choose an order block or any type of the POIs, doesn't matter, that is unmitigated. So let's back to rule number 4. So rule number 4 is high probability POI should be the closest POI to the liquidity. As I mentioned to you, let's say we have 2 POIs here. Okay, if you have a liquidity here, okay, and these are your, let's say, the POIs. Okay, here is the liquidity. The valid POI must be the nearest POI to the liquidity. Okay, we can expect to price take this liquidity, take out this liquidity, and come and give us the reaction here. No, price is gonna take the liquidity fast as possible and give the reaction so fast. Okay, so what we can expect here is price take this liquidity here, then react from this unmitigated closest POI to the liquidity, then go for other liquidity upside there. So this is going to be 4 important rules that you must understand and give attention on it. So let's dive into the key levels. So our view to the key levels and the POI is going to be completely different from what you learned and before. So the POI we will use are key levels, which are nothing but the starting point of what POI have became as you have known them so far. So, and also the key levels, it's not a zone for us, is a price level. Okay, to understand them better, we will use the POIs and combine them with OHLC values. Okay, if you don't know what they are, you will find a diagram at the right side that I'm going to dive in right now. So now, let's first of all talk about a bullish candle. So we know the bullish candle open area gonna be start from here. If you see any bullish candle that I'm going to show you an example right now, it's gonna be the open area of this point. So after price, let's say an opening area happen, for sure in the bullish candle price gonna go up, it's not gonna come down. Okay, let's say if the open area candle is here and the price level is, for example, it's 1, okay, the bullish candle must be on the, let's say, to the upside, right? So that's mean the close level, it's gonna be on, for example, a 2. Let's say we had a candle open on the price level number 1, 1, then goes up and close on 2. So we know this area gonna be open and close. Now, for sure, that's not gonna be too fast, expecting second time frames. But let's say this is gonna be a 4-hour time, 4-hour candle. So this 4-hour candle gonna start to move slowly. Okay, first gonna be open, go up, come down, go up, go higher, then come down, and after 4 hours gonna be closed in this line. So if we want to explain this line gonna be first open area, price gonna go up or go down, who knows. If price come down, the maximum level that price come down gonna be this area. Okay, so let's say here is 0. Okay, so price open, come, or let's be a little bit realistic, this is gonna be, for example, 0.5. Okay, so price open at 1, price come to the 0.5, then start to go up. So the 0.5 is the maximum level price start to drop. Okay, then price start to go up, price reach to, for example, let's say 2.5 area here. Then after price tap to the 2.5 area, the 2.5 is the maximum level that price goes and start to drop and close at 2. So these wicks or shadows here, it's mean the high and the low, or let's say maximum level of the price that price touched and go on this candle. So this is going to be just for a bullish candle, and for bearish candle it's going to be completely same. So the open area going to be different, open and close area going to be different. So let's say this is a 4-hour candle here, and the open area is at this point, because we know the bearish candle, it's going to come to the downside and the stuff going to the upside, right? Because it's a bearish candle. So the open area going to be here. Okay, so the open area going to be here and the close area going to be here, and this is going to be the same, high and the low maximum price level reach. So let's say if price open at, for example, let's say 2 here. Okay, so price gonna, let's say, for example, let's go up, price go up, tap to the 2.5, then start to come down and then tap to the, let's say, 0.5. Okay, so and close at 1 here. Okay, so this is going to be the bearish candle. So this is going to be how OHLC levels work. So remember that every OHLC value of a POI is what we define as a key level that we are going to discuss about it. So if you want to dive into more about OHLC levels, we must take a look to the charts here. So let me just go to the daily time frame. So in the daily time frame here, let's talk about this candle here. This is a bearish candle. So the open area, it's going to be at this point, right? So I'm going to just mark them for you guys. So I'm going to mark it with the blue. So this is going to be the open area. So price start open, let's say price start to go down. This is the maximum level that price reach. So this is going to be the low, and price go up. This is the maximum level that price go up, and price close here. Okay, so this is going to be the open, low and high and close. So in the bullish candle, it's going to be the same. Here is going to be the open area, price, let's say price go down. So this is going to be the low here, and this is going to be the high here, and this is going to be the close area here. So if you want to go to the, let's talk about this candle or any candle, random candle here. So this is a bullish candle, right? So price opened from here. Let me just mark this with a color here. So price opened from this area, goes, this is going to be the low, this is going to be the high, and this is going to be the close. Okay, so we are going to talk about how you can find a POI in the OHLC levels. So this is going to be the what is OHLC levels, and in the following lessons you will see them displayed as zones just to have near slides, but remember they are price level, not zone. So let's dive into them. So the first of all, let's start with the order blocks. So the first PI we will explore is the order blocks. We have a bullish order block and a bearish order blocks. A bullish order block is the last sell candle or last bearish candle before a bullish move. Okay, I'll be going to show you an example, so no worries about that. It's not just going to be about the whiteboard explain. So let's say this is an example of a whiteboard example of a bullish order block. So what is the bullish order block? Is a last sell candle before a bullish move. Okay, so this is going to be a bullish move here, right? We can see a green candle, a bullish move here. So the last bearish candle before the bullish move going to be this area. So this is going to be our bullish order block. It's not always a single candle. In some example, we may find a group of candles that on higher time frame we will form a single candle. This is also so important. Now, what is a bearish order block? It's going to completely opposite. Let's say we have a bearish move here, or let me just explain it. So better here. So these are going to be the bearish candles here. Okay, these are going to be the bearish candles here, or bearish momentum. So the bearish order block is the last bullish candle before them. So let me just change the color here. So let's say we had a bullish candle here. So the last bearish, the last bullish candle before the bearish movement, this is going to be our bearish order block. So this is going to be so important. So by the term move, we can also mean a single candle of the opposite color. This is going to be then the simple move. In the simple language. For an order block to be valid, it must take a liquidity. This is going to be one of the important tips that I recommend you to add your trading plan. If you want to find the best order block, okay, pay attention. We talk about the POI rule. That must be high time frame, unmitigated, nearest to the liquidity. But if you just, let's say, looking for the best order block, always pay attention to order block to just have a liquidity swap, okay? Order block must take a liquidity. So I just look for the order blocks that take the liquidity in most of the case. I try to look for the best order block that take the liquidity. For example, here, see, price take out the liquidity. Price take out the liquidity, then this is going to be the best order block that price going to tap in and give us the reaction. It's give the reason to become a point of interest. So let's dive into some example of the order blocks. So example of an order block. So let's say here, what we have a bullish move to the upside. By the way, there is no reason to all the candles going to be the, let's say, the bullish. We're talking about the bullish movement, okay? So in the 80% or 70% of the time in the bullish movement, you are going to see a bullish candle. So now this is so important. The last bearish candle before the bullish move is this area. So here is going to be a few tips that's going to help you a lot. So you can choose all of this level here as your order block, or you can choose just an open area until the end as your order block, or you can choose a 50% of it. So now you may ask yourself, okay, Ebol, which one is so important? Which one is so better? So I recommend to choose, so let's just call this A, let's call this B, and let's call this C. I personally, in the most of the case, go with the B level. I don't recommend C level, but you can choose it. Just backtest them and try which is going to work well for you. And I just working with a lot of time with the B level, because why I choose a B level, because at this point is most of the volume is at this point. So there's going to be high probability if I have the nearest POI, let's say here, I'll be going to set my order here. And sometimes I'll be going to choose A. It depends on where the liquidity is. So if the liquidity is here and A is here and B is here, I'm going to choose A because it's the nearest to liquidity. But in some case, I have the both is so near. It's going to be, let's say, a maximum 5 pip, 6 pip between, and let's say a difference area. I'm going to choose B in the most of the case. But the most important thing is, if you pay attention here, we have a liquidity takeout. So this is the list liquidity takeout going to give you the reason this is going to be the best valid POI. So, and also don't forget the fundamental of the POI rules. A liquidity is placed here. Okay. So that's, as you can see here, price take out the liquidity. Price going to be fast on the liquidities. Price going to take this liquidity, go to the other liquidity. Price going to take the A to B, B to C, C to, for example, D. Okay, so that reason the liquidity point is so important, but price going to take it fast as possible. So it's so important. I'll be going to make another a video about the liquidity, the reason, 100 A to Z of the reason. What is the liquidity, how market makers make liquidity, and how you can use a liquidity logic in your trades. And I already teach it inside my Discord community. So this is going to be so important. So we have the liquidity order block, the liquidity takeout, easy peasy. So this is going to be, as you can see, price tapped in, take the liquidity, go for other liquidity, A to B. So let's see the other example here. So here we have another example. So what we can see, a bearish movement, right? So what we can see here is price take out the liquidity. We have a bearish candle. So we talk about this, a last bearish candle before a bullish movement. It's going to be this candle for me. So because we already have a bearish movement to start here. So this is going to be the last candle. For sure, you can choose this. As we talk on the 50%, let's say the 50% is here. Okay. So the 50% off order block. So it's going to be A, B, C. Okay. I personally going to choose with the A, but it depends on my liquidity. So what we can see, price this high failed to take this lows. So this is going to be a failure swing. This is going to be the type of the liquidity that I make the video in my YouTube channel about the T1 and the T2 liquidities that you can watch here, or you can check the description. So price created, price take it up. Okay. And as you can see, price tap to the, let's say, A level and start to drop. And as you can see here, we missed by a pip to price tap to the B level, right? It's going to be about 1 pip. These are so normal. I call this a broker fall because if you check other brokers on the MT4, MT5, or other trading trading view on or let's say forex.com, sometimes these are going to be different. So these are going to be the liquidity fall. So that reason I always, once you set your, let's say, limit order here, don't sell it like this on the trading view. In the MT4, MT5, it doesn't matter if you choose any brokers, just set it. If you're looking for sell, just a little bit lower from the area that you are looking for. Point of interest. If your sell limit is here, just set it here. 2 different, 3 different pips. It's not going to make a huge difference, but it's going to protect you from the missed trades. Okay. So as you can see, price take the liquidity, and this price tapped in and go for other liquidity that creates here. And as you can see, it's for fill. So let's dive into this quick example here on the chart. So what we can see, a bearish movement. So let's say we are looking for an order block here. Okay, so the order block is a last candle before the bearish movement. So this is the bearish movement happened. This is the last bullish candle. The last bullish candle before the bearish movement happened. So this is going to be our candle here. So also, as you can see, this order block take the liquidity here. This is give a reason that our point of interest is valid. So what we can see, one of the rule of the order block. Now you may ask yourself, which one are we going to choose? I can choose this. I can choose from the body, the volume is, or I can choose the 50% of it. That's going to be pretty much at this area. So this is going to be the A, B, and C. I'm going to write it A, B, and the C level of the order block. So as I told you, the best POI, and one of the rules that we're going to have is the POI that we have liquidity below it, or above it. It's dependent on what you are going to look for, sell or buy. So here what we can see, a liquidity. So pretty much the A, it's not making sense for me. Which order block is nearest to the liquidity? 100% B, right? So are we going to choose B as a most of the time for my POI? I'm sorry, my order block POI, let's say. So, and as you can see, let's see what's going to be happen. Price tapped into this area, take the liquidity, and start to reverse. For sure, also price tapped to the 50% off it, but I don't play with the 50% off the order block. I always play with A level or B level. So the second POI we will explore is the bearish and bullish break blocks. The break blocks is simply an order block that has not been respected. Okay, so when with the price, so let me just tell you the break block in a simple language. So let's say we had a bearish order block here at this point. Okay, so just take a look to the diagram. For example, don't let's say dive into this bearish movement. Just let's say we had a bullish movement to upside. Okay, so or I can let's say draw it for you better here. Okay, so let's say we had a bearish order block here at this point. Okay, but price didn't respect it. But once prices start to fall down and tap to the order block here, price didn't respect it and break this low here. Okay, simply like this. Break this low here. Okay, I need to draw it again. Let's draw it with auto color here, red. So let's say this is a bearish order block. This is our bearish order block here, but price didn't respect it. Price break this low. Once price didn't break this, once price didn't respect this and break this and create a break off market structure here, okay, this area gonna be a break block. So price gonna tap this and start to drop. This is gonna be a bearish order block. Bearish break block. And what is the bullish? The bullish one is completely going to be opposite. Let's say we had a bearish order block here. Okay, I think I make a mistake to call this names because I'm not called a bearish or bullish order block. I just call this a break block or order block. Okay, so let's say we had an order block here. Okay, but price didn't respect it and break this high and create a break off market structure. So now this order block simply here will become a break block. So what price gonna do is price gonna tap to this area again and start to continue the movement. So the break block will typically be found at the specific point within the structure. And below this diagram, you can see this diagram here. So the order block, price create break off market structure, didn't respect it, and tap it again. Again, we had a bearish order block here, price didn't respect it, create a break off market structure to upside, and tap to this area and go up. As you can see, a break block usually grows when the price create a break off market structure. Okay, so now let's dive into some example of a break block. So example of a break block. So it's completely easy. Just take it so easy. Don't rush about it. It's so easy. So what we have here, don't watch this move here. Okay, forget this move here. Okay, let's say price take the liquidity and the last bullish candle before the bearish movement is going to be our order block, isn't it? So this is going to be our order block here. Okay, this is going to be our order block, right? So, but price didn't respect this. Price created break off market structure to upside here. Okay, now this area will became order block. Now, it's going to be the same as the order block. Okay, let's say the break block is brother of the order block. So don't take it so hard. This is going to be your A level. This is going to be your B level. Also, you can choose a 50% of the break block. I personally don't do that, but it's completely up to you. I personally go with the volume, the B area. The most of the volume is here. So we're going to find the liquidity. Liquidity is the main key. And this area is the nearest point to the liquidity. So as you can see, price tapped in and go up. This is gonna be example of a breakup block. Now let's go to the other example here. So don't take to this move. Just forget this move here. Let me just draw it for you. I mean, this move here. Let's say we don't have this move, okay? So the last bullish candle before the bearish movement. So the bullish movement start from here, isn't it? So this is going to be our order block here, right? Let me just draw what this tool is going to be. But price didn't respect it, okay? Price created break-off market structure here, okay? So once price created break-off market structure, this area going to be our breakup block for sure. Now you can choose A area. This is going to be the bear area from the volume. It's completely up to you, and it's going to be the A area. We have a liquidity here, so it's good to take a B area. And as you can see, price tapped in and give us the reaction. Let me show you one example on the chart. Then we can continue to the third type of the point of interest. Now let's dive into this example here. So just take a look to this area, okay? And take it so easy. So let's say the last candle before the bullish movement, the last bearish candle, it's going to be this, isn't it? Okay. So, but price didn't respect it. Price take it out and create a break-off market structure. This is going to be so important for us, that price must create a break-off market structure here. Okay. Now this area going to become a break block. That's it. So now my training view is a little bit slow here. And as you can see, price tapped into this area. And as you can see, price to start the reaction to the downside. See? That's it. This is going to be how we must approach to the breaker block. It's so simple. Before you just identify your breaker block, first of all, go with the order block scenario and follow that scenario then to become to the breaker block as I teach you. The third type of the POI is imbalance fear or fair value gap. It's the same name. So it's going to be too simple. When price has not been delivered fairly between buyers and sellers, the market will become one-sided, which ends up leaving an imbalance in price. So let's say we have a 3 candle here, okay? So between this wick, the first candle wick, and the third candle wick, we have a gap here. So this gap, we're going to call it as an imbalance, and we are going to take this fill area. So when I mean fill, that like this is the gap we have between the first candle and the third candle, right? So this is going to be the gap in the second candle, right? So the fill area for us is going to be this point. So a lot of you guys are going to take this area. I don't recommend it. Now at the time of the, okay, take the 50% off it, or the start point of the imbalance is dead. The thing you can do is just take the fill area, the 100% of the imbalance. That's going to be this area, and the price is going to take it. And also the important thing is, take a look to this example. We have a week here, but we don't have any gap here, right? We don't have any gap here. So these are not going to be considered as, let's say, imbalance. So this is so important. The way you can identify an imbalance is the gap in the middle of 3 candles. So between candle number 1 and 3, there will be a gap where to the candle number 1 and the candle number 3 don't be touched. If they touch, then there is no imbalance. Okay, so this is going to be the thing of the imbalance. It's so easy. Don't take it too hard. Let's dive into the example. So this is going to be the example. Just take a look to this here. This is the first candle here, the second and the third here. Okay, between this and this, what we have is an imbalance. See? So yeah, for sure, after that we had some movement, but don't forget, we are going to take the 100% of imbalance. That's going to be this area for us. This area for us, okay? Let me just draw with the line here. This area, this is going to be an imbalance fear area for us. Okay? So don't care about this area, just care about this area and below this area, okay? And as you can see, just price come, fill this area here, and tap to this area and start. And also take the all, and the liquidity is the key. Also, you can see price create the liquidity here. That is a good sign for us. So let's go to the second example. The second example, as you can see, this is the first candle, okay? This is going to be the second, and this is going to be the third candle. Between the first and third, what we have, a gap of this area. Okay. So we are not going to take anything inside of this. We are paying attention to this area. See? This area here. Okay. And everything below it. So we are going to take this area as imbalance fill. This red area that I draw. And what's happened here, as we can see, price fill the imbalance, tap to this area and also the price create the liquidity here. That's a good sign. Fill this area and go for external range liquidity, let's say. This is going to be how we can approach to the imbalance. Let me show you one example inside the chart. Let me just show you an example here. So this is going to be the first candle. Okay, this is going to be the second, and this is going to be the third candle here. Okay, the first candle, second, and third. So we can see a gap between the first and third inside the second candle. So we are not going to take anything inside of this, as I told you. The important area for us is going to be this area. Okay, this area for us. So we are going to pay attention to anything here. And as you can see, price create the liquidity here. That is a good sign. And what we can see price take the liquidity, fill the imbalance, and start to reverse and go for other liquidity. Now, the fourth POI we are going to see is hidden base or hidden base. We also call it HP. I mean, this symbol is going to be too simple. That we're going to write in the description. So understanding this topic will allow you to identify an order block in lower time frame without going to do it. So if you want to identify the order block in low time frame and high time frame, just take a look to the hidden base or hidden base. So how are you going to do that? It's going to be completely simple. So once you have two shadow like this, the first and second candle create this type of the shadow. Okay, so this is going to be your hidden base, bearish and bullish hidden base. The hidden base can also be seen as a refined version of Den friction. 1, 2, 3. The hidden base also can be 1, 2, 3. The hidden base. Okay, 1, 2, 3. So yeah, let me show you some example of a hidden base or hidden base on the next slide. So this example of the hidden base, as I told you, just take it so simple. There is no logic finding the hidden base as a pattern. Just remember the pattern of understanding this hidden base in the low time frame going to be the order block. So the first and two candle creating the shadows like this. So as you can see, price created the liquidity below it. Also, we have liquidity here that price already taken. So what we can see, price tapped in and start to reverse, right? So there is no having the A level, B level for taking the hidden base or hidden base. Just take it all of it. In the next example, what we can see here is two candle create like this pattern. Okay, in the low time frame, this is going to be the order block. So the logic in the low time frame, if you go to the low time frame, you're going to see price. Here we had a bearish movement that takes some liquidities and go up, create a break of market structure. You know, that's it. So price created liquidity below it. And what we can see, price tapped it and start to reverse. Price going to take a liquidity fast as possible and start to reverse. So let's go to the chart to show you some example of hidden base or hidden base. Let's take to this example. So we have the liquidity or equal high here. Okay, so now the nearest thing that we have is, yeah, also we have the imbalance here, but we are going to 100% take the imbalance field this area. And we can see what happened here is price create a hidden base here. So pretty much we can take this area Now, if we go to the low time frame here, let's go, for example, 5-minute time frame. Nothing in 5 minutes. Let's go to the 1-minute time frame. Yeah, see, we have a beautiful order block here. See, the last candle before the last bearish candle before the bullish candle before the bearish movement. So it's going to be also the order block. In not on that time frame, but in low time frame, you can see price take the liquidity. So we are not going to dive into the second time frame, but this is the logic. So price take the, let's say, yeah, price take the liquidity, exactly, see price give the reaction from this area and start to reverse. Pretty much respect it. Let's see. Yeah, price start to give us the reaction here. Pretty much the hidden base or hidden base is so easy. By some practices, you can train your eye to find them so easily. But the logic is the hidden base, hidden base is an order block in low time frame. The 5th POI that we are going to discuss is going to be the unmitigated week. The explanation for this POI is quite as simple, as it refers to a week that has not yet been tested without, let's say, within the market. So we're going to have the weeks that is not tested as unmitigated. So these are going to be the unmitigated for us. So you can take any unmitigated shadows, but remember, we must have a liquidity below it if you are going to look for sell, and above it if you are going to look for buy. So a key point of this POI, you can choose this. I mean, you can use actually this method, but I'm not using it because of my personal trading plan. Is that the price can use the open and the 50% of the week. Let's say, therefore, if the price has already tested the open, the 50% could be still be used. But I personally just use, let's say, clear unmitigated week. I'm not gonna go with the 50%, but it's personal. Just test it. It's work for you. If that's work for you, just go with that. I recommend not using the 50% by measuring the week, but rather going to low time frame and find the best POI on it. So if I want to show you some example, the example of the unmitigated week. So see, this is the unmitigated week. We are not gonna, guys, choose this as unmitigated week. This is not unmitigated week. We are calling unmitigated week. So this is not unmitigated. This is also, it's not unmitigated. Okay, this is the unmitigated week that price create a liquidity below it. So see, price tapping and start to reverse. Okay, this is also another major that we can use. Now you may ask yourself, okay, people, we have an unmitigated week here, and also the liquidity here, but why price didn't tap to this area? Because I mean, this is gonna be the reason it's gonna be a lot of elements, and what's happened on the high time frame, what is the market structure. So, and also, yeah, also we have let's say hidden base or hidden base here that price already tap it. So this is gonna, let's say, have a low chance that's gonna, we can use that unmitigated week once we have another POI that's include with this unmitigated week. So just try to choose the best unmitigated week here. That's gonna be this area for us. And if I want to show you another example here, so now just take a look at another example. So yeah, this is not gonna be unmitigated week here for us because price already mitigated. Now you may ask yourself, Ibul, is this gonna be unmitigated week? No, because we don't have any liquidity above it. So there is no reason to take this as a point of interest once we don't have any liquidity. So I personally don't take this as take this area as unmitigated peak until I have a clear liquidity here. But just take a look here. We have a clear liquidity and price. Let's say we have a clear unmitigated week here. Now you may ask yourself, Ibul, what about this? Is this gonna be the, let's say, do we gonna consider this as a mitigation? It's depend. I personally don't take that as a mitigation. Once the mitigation for me is the price at least fill the 20% of that area or 10% of that area. But here we can do just a quick, let's say, tap before the movements happen. So pretty much we're gonna take the mitigation like this. Once we have, let's say, the order block, I don't know, anything stuff. If the shadow here tap to this area, it's not a huge problem. No problem about that. But because it's part of that move, okay? Part of that move. So you can refine this in the low time frame. But if price in the retracement tap to this area and go up, I'm not going to take this as unmitigated POI, okay? So if price is this retracement tap to this area, I'm going to say, okay, guys, this is not unmitigated. This is mitigated, okay? But here, you can see in the, let's say, retracement just price created liquidity here, and as we can see, price tapped in and go up. So let's dive into the chart example. So let's take a look to this example. Okay. So what we have is a liquidity here that is formed. Okay. So sure, we have an order block, we have an imbalance field here. Okay. But for sure, we are going to take 100% of the imbalance. Okay. And also what we have is an unmitigated wick here. So this is not a mitigation for me, as I told you. If in the retracement price going to tap this is going to be mitigation for me. So order block, let's say also this is imbalance order block and pretty much the unmitigated wick. So let's see which one going to price tapped in. So now you may ask yourself, okay, Ebol, which of these areas is going to be the important area for me? As I always recommended, take the nearest area to the liquidity. So in this case, this is just example that I just draw the unmitigated wick for you. But in this case, in the live, if that was a live market, are we going to choose this imbalance here or this order block here? Because this is the nearest one to my liquidity that I have here. So now see price tap to this area, unmitigated wick, and I start to go up. This is how we're going to find your unmitigated wick and the reason behind it. So now it's time to talk about the key level to show you how you can find your key level in high time frame. So one of the important thing is before you start to look for the key levels on high time frame, first of all, you must identify the market structure. So the way I personally look for market structure is going to be a little bit advanced, and my student look for market structure is going to be a little bit advanced and simple. That's going to be take about I think the 20 seconds to find the market structure in high time frame. So after you have, if you want, by the way, if you want me to create another video about the market structure, just let me know in the comments. Are we going to make another video if the requests get a lot about the market structure? So, and also don't forget to subscribe my channel and open the notification and put some like and comments. That's going to make me so happy. So now how are we going to find the key level? It's going to be pretty much so simple. If the market structure is bearish, if you are bearish overall, so for example here, the major break of market structure downside, we are in a bearish range from here to here. Okay. So if you, as I told you, if you want me to create a video about this, just let me know. So we are targeting this external range liquidity here. Why? Because price take off the internal range liquidity here, right? So price take off the internal range liquidity here. We are going to targeting external range liquidity here. So this is going to be the strong high. It's going to be the weak low here. So pretty much we are in a bearish market structure. So you must understand every OHLC level in a bearish market structure, the open area of the new candle. If you, for example, the new candle going to be a start from here, right? We talk about OHLC levels. The new candle area going to be open from here. So every POI here above this area going to be the pro POI, going to be your key level. Key level is not a zone, it's an area. Okay, so pretty much this is going to be the areas that you are expecting a reaction, a major reaction from it. Okay, pretty much the market is not 100%. We don't know which area going to be the major reaction from it. Price can go up and take all of this stuff, you know, who knows? But for sure, we are going to look for a confirmation in low entries. I'm going to show you some example, some case studies after this, the trade that I took with key levels. So now the new candle going to be open from this area. So let me just, this is going to be my strong high, stop on break of market structure, strong high, price take out the internal range liquidity. Now we are targeting external range liquidity here. So this is going to be my external range liquidity here. So after internal takeout, we know price, the next target is going to be external range liquidity, and all of the highs can be protected. Now the highs that is matched with the key levels is the best high that we can look for. Okay. So the new candle is going to be open from here. And a quick tip, if you want to look for a market, the key level, wait for Asia session finish, then go for a key level. So here in the backtest, unfortunately, I can't wait for Asia session finish because in daily time frame, that's going to show me the move. So that reason, are we going to escape this rule? So here's going to be the new level. I mean, the new candle going to be open from this area, isn't it? This, let me just zoom in a little bit. Okay. So as I told you, the market structure is bearish. Every POI, the nearest POI above this area, gonna be our key level. So what we have, you're gonna ask yourself what we have. You learned 5 stuff the POI in this mini course, bro. You are done. You're ready for killing the market. Just ask yourself and follow the step that I told you. Okay, what is the? What POIs that I have above this? Okay, just mark all POI. It doesn't matter. You have an order block. Okay, here, and also to open up the order block here that is unmitigated. So remember the fundamental rule of the POI that I told you. So we are going to choose the unmitigated one. We are going to choose the unmitigated one. Okay. So what we have, do we have any other thing here? Yeah, we have unmitigated week here. That's good. We are set already. And so we are not going to choose this, by the way. And yeah, nothing else pretty much here for me. So now we have 2 top of the area here. Now you're going to ask yourself, which area is the nearest one to the open area of the candle? This or the block, right? So this is going to be our key level. So we are expecting a major reaction from this area. So what is the market structure? It's a bearish. So we are expecting a bearish reaction, a bearish major reaction from this key level. For sure, you can already set a sell limit here with a 5 pip stop loss, but this is not going to be how it's work. I'll see a lot of traders do that, but I personally not this type, because I personally trade on an investor account. It's a 6-figure investor account, so for me it's gonna be a little bit risky to take it. So instead, not about it, I'll be going to look for my A+ setup. What is my A+ setup? Looking for confirmation. That I'll be going to show you on the case study. So let's see what's going to be happen. And also, okay, play it. See, the price tapped to this key level. Key was the reaction. See, he was the reaction from this level to the downside. Now, before we dive into this, let's just go back. Now you may ask yourself, okay, Ibo, what about the levels that are below the open area? So as I told you, in a bearish market structure situation, any key level above the open area, okay, in this bullish candle, for example, above this, going to be the pro POI. And any POI below this, going to be the obstacle. Going to be just a quick, sometimes 50-50, who knows, right? Going to be, let's say, POIs that just price going to tap in, give us a little bit of reaction on low time frame to just give us a re-entry for, let's say, our bearish scenario, right? So it's not going to be the POI that you're going to looking for buy. I don't recommend it. So you're going to ask yourself, ask the same question, bro. What we have here, we have, okay, we don't have any imbalance here, first of all, because the third candle doesn't complete. So don't take as imbalance. But we have an order block here. And also, a lot of you guys going to ask, okay, but what about this breaker block? Are you going to take this breaker block? I personally no, because the 2 candle for me, it's not going to, maybe in 4 hour, yes. But in the daily time frame, no, because I need a little bit, we're talking about a last bullish candle before the bearish momentum. So pretty much no. And are we going to take this order block? Also, we can take this open area. It's completely up to you. But this is not going to be a key level. This is going to be the key level as obstacle. So this is going to be the pro POI. This is going to be the key level. Yeah, for sure, this is a key level. But don't expect this on this, this reaction on this key level, because it's obstacle. The market structure is bearish. So, but we can expect a little bit of reaction on low time frame for a re-entry stuff here, okay, on that day. So the new day start. Let's see what's going to be happen. See, price tap to this key level. Let's go to the 4-hour time frame. Okay, price tap to this area, start to give us the reaction. See, also the confirmation in low time frame. Tap to this area. Also, you can refine them. Refinement is so easy. What you're going to say, okay, this is the daily key level. What you're going to say, what is the nearest POI above it? So here we can choose this hidden base here. Okay. And also here we can 100% take this imbalance field, see, at this area. So the refinement is easy, but don't go with the refinement a lot. Don't go with a lot of difference. Just try to choose the nearest POI that makes sense for you. And see, this is the reaction price give. As I told you, don't expect something like this on these obstacles. So the reaction is going to be too low and price going to continue the bearish movement. Now, if I want to show you another example here about the key levels. What is your market structure? You're going to ask, what is my market structure? My market structure is bearish. So remember that theory that I told you. So in the bullish market structure, every POI below the open area of this candle gonna be your pro POI, and every POI above it gonna be, every key level above it gonna be your obstacle. So here, pretty much again, you're gonna ask, and also try to don't go with, let's say, too far away POIs. For example, if this is gonna be the new candle open for you, don't take this unmitigated wick. This is not gonna make sense. This is too far away for market maker to move, let's say, 100, let's say, 12 pip on that day to just move this price to this area. So try to choose the nearest one. And if you don't have anything on the daily time frame, any nearest POI, it's a little bit difficult for you. Just go to the low time frame, go to the 4-hour time frame to find it. So let me see if we can find example here. So what we can see, the market structure still is bearish, but price tap to this unmitigated wick. This is also a key level, right? So this unmitigated wick, but it's an obstacle. It's obstacle. So what we can expect, a bullish reaction from here, but it's just a reaction. So what is the nearest unmitigated POI that we have from this open of the area? We don't have any imbalance. This does not make sense. We must wait for third candle to form. Okay. We have this hidden base. Also, we have the nearest one is this order block, right? See? So now we can choose the order block. So a little bit, the difference between the open area level of this, it's completely a lot. So in this case, what I do, I just take the whole of the order block. And if prices start to come up, no problem, because I'll be going to look for confirmation tree. I'll be going to change my key level to this area. But in this case, I'll be going to choose this first. So we can expect a reaction to upside from here, then a bearish reaction from here or here. So this is going to be my pro POI. And as obstacle, I think this unmitigated wick below this. This is one of the nearest one, but already also take to the yesterday candle. If you're, for example, looking for POI today, key level today, take a look to the last candle to see which areas price is in. So for me here, price tap to this obstacle. We know after price take out the internal range liquidity and go for external range liquidity. All these strong lows are unmitigated wick. Unmitigated POIs here going to be obstacle. So let's see what's going to be happen. Exactly. See, price start to go up, okay, from this obstacle and give us the reaction here. Now the new day start, and I also tapped to the key levels, but at the end of the New York session, price tapped it. So we can't expect a beautiful major move on it. No problem. So the new day start, no worries about this. So here is going to be two situations. The new candle is going to be open from this area. The market structure is bearish. I already cleaned it, but we are targeting external range liquidity. Price already react from the obstacle, so that's good. The open area is from here. So this area tapped to this key level yesterday here. Going to be two scenarios. If price give us the confirmation entry here, we can go from sell here. Or if price want to go up, this is going to be the, let's say, see this imbalance here also we have. This area going to be the next daily key level for us. As obstacle, what we have is going to be this unmitigated wick here, but just obstacle. So let's see what's going to be happen. See, price tapped in and start to give us the reaction. Don't expect let's say a waterfall drop from here. Okay, just go to the 1 hour time frame. See how much is this, bro. If you take a 5-minute confirmation here, this a little bit reaction, it's 35 pip. If you take, let's say, a confirmation entry, let's go to the 5-minute time frame. Confirmation entry from here in the 5-minute time frame. Let's say with a 5 pip stop loss and targeting just this low, this is going to make you 4R in just 1 day with the key levels. And a 4R is 4% if you risk 1%. I personally, my daily target is a 4R. I'm going to show you a case study here. It's 4%. And if you have a funded challenge, if you risk 1% in these A+ setups, in 1 day, you are going to easily go with this A+ setup, okay? I'm not talking about stacks to get a stacks here and killing the market. I'm just talking about A+ setup, okay? 1%, 4R targeting, A+ setup, key level confirmation. That's going to be the A+ setup. And the also pro trend, 4% done. Half of challenge done, bro. You're set. Easy peasy. So this is how you're going to use the key levels. Now, let me show you a case study that I also shared with my student on Discord. and I personally catch it in the investor account, and that's easily make me above 2K. This beautiful setup that we're going to show you in my journal section. So let's dive into this. So let me show you the trade that I take on 26th of the April. So what we can see here, 26th of the April, let's say 3:48 p.m. Euro USD sell, an easy take profit, that's my TP, and 1% risk on the investor account, and final result was easy 5R. So as you can see, I had my I had my key level here, so I was waiting for price to tap and give me the confirmation tree, and as you can see, this is the before and this is the after that price tapped in, and on the news time, just grab the liquidity here, the equal high and a star to reverse that. I'll be going to discuss about it, and a beautiful 5R. So my daily target is 4. That's mean if I hit 4R on that day, I'm done. I'm done for the day. And my daily my weekly target is about 8%. That's mean if I had 2 great and successful trading week, that's mean I'm trading day. That's mean I'm done for the week. So, and as you can see on the April, on just this 2 trading weeks, I hit my 9.4% out of 16% of my target, monthly target, without any drawdown. And currently, I'm on the May today. I think today is about, yeah, it's about 10, and currently I'm at 3.2% of the profit. So by the way, this is the backtest software and the journal software I personally use. I don't use Nation and all of this Excel anymore because I think those are going to be too messy. But as you can see, this is so clean. You can create your own journal, buy, sell your USD. Also the trade type, take profit, stop loss, break even, partial and missed. You're gonna have your own checklist, risk. For the final result gonna be automatically. Also you can write a risk reward that's gonna be automatic. Calculate for you automatically the date and the hour, the image and the comments. It's gonna be too beautiful. As you can see, that's gonna find your win rate also. I personally use this. I'm starting to use this profit. If you want to just have this beautiful backtest software and the same time the journals stuff, you can click the link on the description. You can start your month with beautiful 30% off, a beautiful discount with the code that is set automatically on the description. So now let's dive in to the case study of this trade. So we are in 26th of April. I'm going to show you the logic behind this trade. So I'll start from the daily time frame to identify my market structure. So the market structure was bearish for me. So in the weekly time frame, I'm in a bearish range. Stop on break of market structure, strong high here, strong low here. So what's happened here, price take out the internal range liquidity here, and we know after the price take out the internal range liquidity, what's our next target going to be? External range liquidity at this point. So this is going to be my next target, and as we can see, I have 2 main break of market structure to downside. I'm sorry, the minor break of market structure. So these are going to be a good news for me that price is still having that bearish opportunity. They give us the bearish opportunity and bearish structure. So in the daily time frame, the first thing that I look for is the market structure here. So a major and a minor break of market structure here, and I already aim for external range liquidity down here. So that's mean the market structure is bearish. And one of the important thing here is the key levels. So what I have as a key level here, so the new candle gonna be open from this point. So anything above this, the nearest POI that I have is this unmitigated week here, and this unmitigated week here below this. So because my market structure is bearish, that's mean I will going to look for this as my pro POI and this as obstacle. So I'm going to choose this as red. Okay, now I'm going to look for the range that is matched with my scenario. What is my scenario? I mean my key levels and my market structure. So what is this? My market structure is bearish, right? So the nearest range that I have, it's going to be, I have a strong high and stop on break of market structure here. So this means this is my strong high and a weak low. This is my range. And already key level is on a 50% of it. That's good, makes sense. So already if we go to the 4-hour time frame, price created liquidity here, and also price created liquidity here. And this high failed to take this low, and as you can see, this is gonna be a beautiful key level for us. So I wait for Asia session finish. So we are waiting for Asia session finish. So I didn't catch any counter trend here, 1 minute buy until this area, but you can, because I'm just looking for A plus setup. So see, price tap this, stop hunt. I was looking for one break of market structure to downside in a 15 minute or 5 minute time frame. So yeah, let's just go to the 5 minute time frame. So stop hunt, I'm looking for one break of market structure to downside. Great. So see, I have stop hunt here and break of market structure here. That is good news for me. So that's mean that another strong high created. So for confirmation tree, after I have my strong high for bearish, for bearish scenario, where is my liquidity? Liquidity is main key. So what we have here, equal high, a liquidity. I told you, we talk about the fundamental POI's liquidity. So this is going to be the equal high. So this is going to be my liquidity. Now it's time for looking for another key level inside this range. What we can do, we can go, as I told you, for POIs or key levels, we must go to the high time frame. So I'm going to start from 30-minute time frame. So this is going to be my area. What I have here, what is the nearest POI above this? I have this imbalance here, and also above the imbalance field I have hidden base here. So we can easily enter this with 5 pip stop loss and targeting this low as a liquidity. And let's see, and as you can see, price take out the liquidity, respect to this area, and continuation that reaction from the key level. So this was a daily obstacle that we had. Just see the reaction. Sometimes we're going to have reaction, sometimes not, but here price didn't give us any reaction. See, also in the low time frame. But sometimes in the daily key level, the daily obstacle, we are going to have some reaction for re-entry, but sometimes not. In this case, see, so that reason I told you don't look for buys on the key levels, obstacle key levels, because you're not going to have some reaction sometimes. And if you're looking for buys here, you're just going to waste your time. So instead of that, just look for a pro trend confirmation. So easily, I also announced this trade in my Discord channel. So as you can see, EU 26 of the April. So I share a video with the student. I mark up all of this. I do this every day on my private Discord community. I just share all of my trade, all of my point of view live on the market. I also talk about a buy that you can take until this liquidity takeout as a ping pong trade, but I personally didn't take it because I'm just looking for A plus scenario. And I already explained this movement on the video. We can have a liquidity. We're going to look for a nearest POI here, liquidity takeout, and price tap this area. We can expect this, and easy trade that I shared with the student. This is a learn and earn trade in my private community. So after you learn the strategy, you need to coach to prove you I'm taking the trade. This is how you can earn and learn. This is going to be the section that everyone looking for an easy, let's say, trade. I do this every day with the student. I share my loss, my win, my break evens, all the trade that I take live on the market with the student. We have 6 calls per week, and in this 6 calls per week, we are talking about the back test, we are talking about live trade, we are talking about everything that you are in the mind. Also, we have a live trading section. So if you want to join to my private community, just check the description on the below. If you want to just change your journey and learn my strategy and be profitable and pass your prop frame in just 3 months, if you are smart, in 3 months. If you are not gonna put the hard work in 6 months, just check the description on the link on the description. And if that video helped you, don't forget to drop a like and comment. Don't forget to follow my social media and join my Telegram channel. I also share a lot of free content on that. And yep, just share your idea in the comment section. See you all.